September is definitely upon us. The nights are getting cold, the days are cooler, kids are back to school, and the Bank of Canada just had their September interest rate decision meeting. No surprise this morning, the bank left the prime rate unchanged. They also reaffirmed that they were going to continue with the quantitative easing $5 billion a week bond buyback program. That's a mouthful. So what did the Bank of Canada say during today's press release? It was interesting to note that the Canadian economy was recovering better than expected, which is really fantastic to see. However, the bank did mention that they see that largely due to some of the programs that they've introduced to support businesses. Household spending was also better than expected, and that's something that the bank will keep an eye on with great interest, but it's a great sign to see that Canadians are feeling positive and optimistic about the future. So that's all very positive from the Bank of Canada. However, it comes with a caveat, a little asterisk, because the bank does suggest that the future recovery of the economy will be slow and choppy. Of course, one of the biggest factors is how COVID will affect us going forward, if there will be a second wave. But even still, they're seeing it as being a very slow, long recovery with no end in sight at the moment. So all that being said, the bank affirmed again that they're going to keep interest rates low to help with that recovery, and that includes the lowering and the maintaining of the prime rate at its current level, and also the buyback program of those government bonds. And the significance of that buyback program is it keeps liquidity in the system, which will maintain fixed rate mortgages low as well. My name is Chris Mulder from Tridac Mortgage. If you have any questions about interest rates or how the Bank of Canada decisions affect you, I'm just a phone call or an email away. Bye for now.